What is transfer pricing? Why transfer pricing? How the analysis has to be undertaken? Friends, I keep on receiving this type of queries from the multinational clients or their tax managers or probably from tax consultants. I daily receive such type of queries. And that is where I just thought to make this video where I'm going to explain not through legal provisions. I'm going to explain practically what is transfer pricing and why it is important for a multinational company to undertake the transfer pricing analysis if there are intercompany transactions. So hi, this is C. Abhishek and welcome to my channel, The Learning CA, where we keep posting videos in the area of transfer pricing, international tax and FEMA. In our videos, we try to give maximum value in these particular areas. And that is where if you are a tax manager or a tax professional or an audit professional or an accounting professional, it is must for you to subscribe to this channel. So if you are new to this channel, please do subscribe to our channel, The Learning CA, where we keep posting the videos in the area of international tax, transfer pricing and FEMA. But before going to video, let me also introduce you to my course, which is I have designed for tax professionals, the ambitious tax professionals and chartered accountants who wish to learn and practice in the area of transfer pricing. Our course, Mastering the Art of Transfer Pricing in 9 days, where I have brought in my 9 years of experience, transfer pricing exposure in this 9 days of course, which has around 900 plus topics, main topics and subtopics, and also it gets completed in hardly 16.5 hours. There is also bonus content in this course. As also we do have a group mentorship feature where we impart mentorship to the ambitious chartered accountants who want to practice in the area of transfer pricing. To know more details, there's a link given below in the description box. You can click the link and you can book the demo call with me or my team, and we will help you out in enrolling for this course. Coming back to the video, without wasting more time, I'm not going to discuss more on legal provisions, right? We are going to understand this videos from an entire practical perspective. So be in this video, have your focus in this video. You can also take your notepads to note down certain important points if you wish to note down. Now, what is transfer pricing? We are going to understand that. Now, technically, transfer pricing has two words, basically transfer and price, right? So there are two words, transfer pricing. Now, what is that particularly? So whenever, just assume a case where there are two related parties and one of the party is located in a jurisdiction which has a different tax provisions, right? Different taxability or tax chargeability in that other jurisdiction, right? So now if these two parties are related through way of capital, either they have a common capital or one is holding or the other one is subsidiary, right? If they have a common holding or sort of capital, or if they have a common control, there are similar directors in these two entities, or probably they have common management, like the same way the common board of directors or who are taking these decisions, then in that case these two entities, if they do any of the transaction, that transaction, the price at which that transaction is being done is called transfer price, right? So that is where this transaction is between related entities, and whatever the transaction is being done, the price at which the transaction is done is called a transfer price. And the analysis of that particular price is called transfer pricing. Now, how we do take the analysis? Now, the transfer pricing is technically, now, if we understand that, what analysis we are required to do in this particular thing? We are required to understand that whether this particular price at which the transaction has happened, whether that is equivalent to the price if the transaction would have been taken between the two unrelated entities, like in a third party scenario. If the same transaction was taken between the third parties, then at what price they would have been taken. So that is where we come to an analysis, right? And we undertake the analysis, and that is what we call a transfer pricing analysis, which we also call as arm's length analysis. The price at which this particular transaction would have happened between two third parties, like two unrelated parties, then that price is called arm's length price, and that is where the analysis which we undertake is called entirely transfer pricing analysis or arm's length analysis. I hope that clarifies. Now, this is what transfer pricing is all about. I'm just giving you one more illustration to explain. There are two entities, both are related parties, and related parties technically we call as associated enterprises in technical terms. Now, if there is any transaction, say purchase of shares, of the other entity, such type of transactions as well, or giving up loans, at what interest the loan should be given technically, or if the physical goods are being sold, probably it could be raw material, semi-finished goods or finished goods. and at what rate it should be sold to the related party, right? So that entire analysis is covered under the transfer pricing analysis, and that is what the concept of transfer pricing analysis is all about. I hope that clarifies now. Now, let me also take one more example here. There are two parties out of which one party is located in, say, the other jurisdiction, say Singapore, and one party is located in India. Now, if Indian entity is rendering some services to Singapore entity, right? Then obviously they would be charging some value for that transaction. Now, as a transfer pricing consultant or under transfer pricing analysis, what we are required to do is we are required to assess whether the price at which this transaction happened, like, you know, the value at which these services have been rendered to the Singapore entity by the Indian entity is at arm's length or not. If the same thing would have happened between two unrelated parties, like that is what we are required to undertake in this particular analysis, and that is what we call as transfer pricing. I hope now we have understood the concept of transfer pricing at a very basic level, right? Now we understand why it is important for multinational groups who have presence, who have their entities in multiple jurisdictions, why it is important for them to undertake this analysis. So see, as you can understand that if a transaction is happening between two related parties, then the government of any of the jurisdiction would want that that transaction happens at arm's length price, right? In the under the arm's length or uncontrolled scenarios, right? The same value would have been fetched if the transaction would have been done between the unrelated parties. Now the government would obviously wish to understand and arrive at a conclusion on that particular transaction. Why so? Because there are chances of shifting of profits or either reducing the tax liabilities, and technically that is where it is important for multinational enterprises to undertake the transfer pricing analysis if there is going to be any sort of intercompany transaction, be it giving of guarantees, loans, or subscription to share capital as well, or probably sale or purchase of services or goods or intangible assets transfer, etc. Whatever is there, if there is involvement of two associated enterprise in a transaction, it is must for multinational enterprise to undertake a thorough transfer pricing analysis, to engage a dedicated transfer pricing consultant, or develop their own in-house transfer pricing processes and team, and then after to ensure that the transaction at which is being done between these two associated enterprise, right, are done at arm's length price only. That is what the entire purpose of transfer pricing is, and hence it is must for tax managers or tax heads to understand this concept well, as also for tax consultants to understand when, in case if there is a transaction if there's a transaction which is happening in your client entity and which may trigger transfer pricing applicability, then it is must for the entity to undertake the transfer pricing analysis. I hope that clarifies, and that is why it is important. So this video was informative to you, and if you have liked this video, please do hit the like button, and please also subscribe to our channel. If you are new to this channel, please do also subscribe to our channel. The links here where we keep posting the videos in the area of transfer pricing, international tax, and FEMA. And if you are a tax consultant or tax professional or chartered accountant and wish to render services to your clients in the area of transfer pricing, you can obviously get in touch base with us through booking a demo call, and then you can enroll into our exclusive course of transfer pricing. This is one of its kind and one of the first course ever introduced in India at a different level. We have 900 topics to discuss in that entire course, and we have also kept that course at your convenience and at your comfort. You can discuss more on this course as well. Thank you. This is C. Abhishek Babsa signing off.